Hello and welcome to BQ Prime. Our guest today is Mr. Prashant Tripathy, the CEO of Max Life Insurance. Welcome to the show, sir.
Thank you, Monal.
We'll be talking about a business update post the FY23 year and the last quarter. So Max Life recorded its highest ever business margins, and I believe we didn't get a chance to speak when the results came out. The highest ever new business margins and a very high VNB as well. I think that came around that had quite surged. So, sir, there has been some element from the budget announcement as well, right? Because we have a very high exposure to the high ticket policies that are now taxed post April 1. So what is the kind of impact that you are seeing going forward, and what was the impact that led to these phenomenal margins in Q4? Do you believe it will replicate now?
Thank you, Monal. That's a very sharp question, and let me just tell you that last year was very good in terms of margin profile. We had a margin of 31.2%, and our VNB grew by about 28% to over 1,900 crores. I think large part of margin enhancement was because of sharp modifications that we had done around our product construct. So we had larger proportion of non-par savings design, which inherently have higher margins. We also looked at our protection plans and some of the features which helped us increase the margin. So overall, a combination of product mix change, higher proportion of non-par yielded higher margin. Of course, March was a blockbuster month, not just for Max Life Insurance, for the industry, and that was predominantly anchored by non-par design. So overall, hence the margin was higher than the regular years. As we embarked in FY23-24, of course, the first quarter, everybody expected that the growth will be much lower, but I'm seeing for the industry a reasonably good growth. Actually, industry is more or less double-digit growth rate, at least the private people, or 8-9% growth rate overall, which is healthier than how it was thought. I mean, most people expected that FY23-24 will be a washout year and there wouldn't be any growth because of more than 5 lakh ticket sizes. So I personally feel very enthused, and that was my expectation too. The life insurance industry is a very fundamental industry. It's a resilient industry, and I'm reasonably sure as we embark in quarter 2 to be closer to our plan. Our plan actually is to grow double digit this year. So we are not anticipating to slow down. All our plans with respect to growth are being accelerated. We are making huge investments in our own channels. We are opening new offices. We are ramping up capacity. We're winning new partnerships. And as a result of that, I'm very hopeful that we will be able to maintain the trajectory. Also, at best, the impact of tax changes will be quite marginal. That's how it is emerging. Okay. And the market is also very bullish on life insurance. You would have seen all the life stocks see a surge, which is how the market is now witnessing. So overall, good story. And there's a lot happening in our lives, and I'm very hopeful that we will have a great year as we go along.
So just a question back on the VNB margins. How would you guide for FY24?
So, margin, I have, this is one question that I've answered to all the analysts also. I think last year was artificially, we do want to reduce the exposure to non-par savings design. So we'll cut down some bit. We will try to cover up by selling more and more protection. But as things stay, I think we will be looking at a sub 30 kind of a number, more around 28, 29, that kind of a number, which we believe is sustainable, which we believe is a true reflection. And this reduction is not predominantly because of the mix change. We are more making huge investments in our own channels. Our own channels have been doing very well. Last year, our growth in our own channels was 43%, which was one of the highest in the industry. And the objective is to continue to ramp up our own channel. When I say our own channels, it means agency, it means direct, it means digital. So those areas of the business are getting special attention, focus, and we're making investments. So because of this additional investment when we make in our proprietary channels for that year, because the investment actually leads to higher expenses, the margins go down. That is predominantly the reason why we are anticipating the margins to fall this year compared to last year.
Okay. So you don't believe that there should be much of an impact because of the reduction in the non-par savings in your whole of the business strategy? Is that correct?
Yes, I mean, that's the premise on which we're working. Fingers crossed. Hopefully, in one more quarter, we'll know exactly which way it is headed. But so far, so good.
So how is protection, panning out in terms of retail and group both?
Very optimistic actually on protection. I think post-COVID, I mean, COVID, of course, saw a big surge.
Yeah.
Artificial demand that got created because of pandemic, and hence the following couple of years were a bit subdued because it was normalizing. But starting this year, I mean, there's a lot of work that life insurance industry did. We definitely did, which was to ensure that we have appropriately priced products. We have strong reinsurance support, and we reviewed all our processes, especially around underwriting, make sure that our ability to select lives is of a good order. With that work which got done, I think numbers are yet to come out, but we have very strong growth in protection. I think we will come upwards of 30% growth on retail side. Similar numbers or higher for credit life. So, we are witnessing good growth. And as we go along, our plan is to accelerate it further. So very optimistic. And it is, while it is a Max Life phenomena, I anticipate that it will be industry phenomena as well. I think protection is a basic need. Everybody needs protection, and with awareness going up, with accessibility becoming easier, with pricing stabilizing, I think more people are looking for protection. So that will continue to be a big growth driver for us as per our strategic imperatives. It is one of the top 5 things that we need to drive.
So in the overall composition of your big product mix, how will the product mix look? Because I think it is 44% right now in FY23 from non-par savings. So how will that change, and where do you see protection? How much portion will be protection and annuity?
We finished last year protection between 6 to 7%. The objective will be increase it further. We will be ideally looking at about 150 to 200 basis point increase in protection mix. It moves slowly because the ticket size is small. One would look at growing protection at least three times higher than the overall growth rate. So, protection is going to be a big area. Annuity equally is a big area for us. We are putting a lot of efforts actually in annuities or savings designs, retirement designs, to ensure that we become a prominent player there. So those two will get impetus. On non-par savings, the objective is not to cut down drastically because there is an inherent demand, but we will not be increasing it further, maybe cut down by 200, 300 basis points.
Okay. So it will still remain in the 40% range.
It might remain, or it will remain.
And is there as much demand as well because of the taxation? Has the demand been altered?
Yes, the demand actually continues because the taxation rules come for more than 5 lakhs. Of course, a large majority gets sold under 5 lakhs. So of course the demand continues. And it is a very transparent design. It is tight. The returns are good. So, we continue to see good momentum. Not as strong as how it was in the March of last year, but reasonably strong.
Okay. So now I have a question on the fact that you're making a lot of investments in direct channels. So there was this very interesting report by Nomura which came out recently, and they said that Max Life is losing a bit of market share, and that could be because of some issues on the bank assurance front. So would it be that these channels would be compensating for the loss of market there? Would we be able to regain our market share, or set for something slightly lower? Because I was also looking at the May numbers for which I have the market share, and I believe we've slipped from the 4th to the 5th position in terms of market share and overall private side. So just wanted to get a sense of it.
So thank you, Mona. That's a good question. Actually, some bit of loss in market share is because of a tactical thing which was happening with our bank relationships. Banks were undergoing open architecture. When that happens, of course, the incumbent counter share drops. The good part is we have maintained very strong counter share position at both our banks. Axis Bank continues to be closer to 70%. However, when the open architecture happened, you can understand that over the last 2 to 3 years, the 100 or 98 became 70. So that takes a bit of an impact. The good part is the base effect is in our favor. We are not losing incremental counter share, which means
Okay.
if the banks start to grow, we'll start to grow. So, yeah, in a way, the objective to increase our own channels is not just to compensate. I'm very hopeful that the bank channels will start to fire really well. I mean, June numbers turned out to be reasonably better.
Yeah.
And they just got published. So if you look at our June numbers, they will look good.
Yeah.
Uh, Overall, hence, I'm very optimistic that the banks will start to uh, do quite well. In both our large counters will start to do well.
Mm.
The objective to grow own channels is to scale up. That is
Okay.
being done not just simply to compensate for the deficit in banks. It
Mm.
is to scale up. I think we collectively believe, with our board's blessings, that India is at a cusp where scale plays a big role, where the opportunities are humongous, and unless we expedite our business and invest, we may miss out on the opportunity. So we are going all out. Actually, the investment is not just taking place in the areas of our own channel. It is,
Okay.
of course, so, but also all the other relationships that we could establish. So right now, we're very busy signing up new bank assurance relationships. We signed up 4 last year, and the couple in
Yeah.
pipeline right now. We signed up with 6 brokers last year. There are 4 more that we signed up, so 10 more brokers. We are signing up new corporate agents. We have put our pedals. We're pedaling really hard to do our credit life portfolio enhancement. So the investment is all over, and
Hmm.
that is with the purpose to grow. And
So,
like,
sir, geographically, is it being expanded? How are we looking at this penetration? Um,
so yes, in Max Life Insurance is a pan India player. I mean,
yeah.
straight through
No,
more.
what I mean is, are we going more into tier two,
No,
tier
no,
three?
I will explain to you.
Yeah.
So we were always present in tier 2, tier 3 cities through our partners, especially banking partners. For example, Axis
Hmm.
Bank, the largest,
Yeah.
they have presence everywhere. They have more than 4,500 branches. So we've
Yeah.
been present. But through our agency, we were present only in top 150 cities. In this
Okay.
tranche, when we are expanding, we are
Huh.
looking at the next 100. So
Okay.
we'll go to close to about 250 cities. So uh, you're right. When we are looking at newer relationships, we are looking at in smaller cities, in the
Hmm.
trenches of India, so that our presence becomes stronger.
Okay, sir. And of course, my last question is on the regulators' efforts. There's a lot of talk that, Bima Sugam might come in from August. Not quite sure, maybe a little delay there, but somewhere this year, hopefully. Do you believe that that will further fire and charge all your channels that you're expanding here? How will that change the landscape? All the various other initiatives that are being introduced by the regulator, what are your thoughts on the same?
So I feel very enthused and very optimistic about all the initiatives that the regulator has started, and it is in 3 different counts. One is Bima Sugam, which is like a very large digital platform which is transparent, where all the life insurance companies could be present with their own products, and all the distributors could be present, and they could serve the customers. The second one is Bima Vistar, which is a unique product, insurance product, not just life insurance product, a unique product which is being created to people at lower income segments who are there in smaller cities or villages.
Hmm.
And the third one is Bima Wahak, is a distributor who will take these products to all the villages. So those are 3 things that are being done. Mona, as you know, India is has the population, world population of more than 20%, close to 20%. But the insurance premium is only 1.5%, which means there's a large delta of for people who live in villages. About 90 crore people live in villages, and their penetration of or awareness of life insurance or overall insurance is of a lower order. The vision that our respected chairman IRDAI has given is to have insurance for all by 2047, by the time we complete 100 years of independence. Now, if that is the vision, it can't be reached through the same products and same distribution channels. Something
Hmm.
very different has to be done. And these 3 are the different approaches that are being adopted. So firstly, digitize and make it available to everybody. The penetration of being digital is much higher. People in villages can go and look at these. Bima Vahak and Bima Vistar are trying to solve it through a physical product or through a physical or phygital mean in the villages. So it's a three-pronged approach to solve this under penetration. And I personally think that it's a very noble objective, and life insurance industry as well as the overall insurance industry is very optimistically participating, and we'll look at.
It'll be interesting to see how it'll pan out for all the bigger players as well. How these three channels will help you all also get a lot of
the additional thing which is also done, Monal, is state insurance plans. So all insurance companies have allocated states, their own states.
Yes.
They will be anchoring Bima Vistar and Bima Vahak. So in a way, it is going to be a responsibility also to drive penetration.
Looking forward to how that pans out. So it was a pleasure speaking to you. Would love to speak to you post the results this quarter as well. Looking forward. Thank you so much for joining in.
Thank you.
This is BQ Prime.
Thank you.
We all know about the India opportunity, but how large could this opportunity be? How long can the cycle run? And how deep are these options for investors? We try to get the answers from Nilesh Shah, Saurabh Mukherjee and Sunil Singhania to these questions at the India Opportunity Conclave on the 13th of July.